What is up, guys? Welcome back to the Reverse Crypto channel. I have another awesome live stream with a HEX OG, a dude who's phenomenal with his technical analysis and a big name in the space. Let me tell you guys, I am so excited for this live stream because I want to get this guy on for a minute. The name of this guy is Access Alive. What's up, brother? Thanks for coming on today. How you doing?
Hey man, thanks for having me on the show. You know, I was just made aware of your presence in the space maybe a week ago. It was actually not too long ago. I actually streamed with Vibra Finance. By the way, what's up going on, everyone in the chat? Appreciate having you guys here. And Adam was like, "Yo, go check out this video on this pDAI thing," because like I was just starting to hear about it, and I was doing my own research, and I was like, okay. And then so I stumbled across your video. And it wasn't too long after that we started exchanging information, and then so here I am. I've come to conquer the lands of speculation and try to figure out what is actually going on under the hood with this whole pDAI massacre, murder mystery thing that's going on.
Yeah, man. No, it's awesome, man. Shout out to Adam over at Vibra Finance. All you guys go give him a follow. Really great dude. Him and Lindsay, they're always jumping into something new. And I actually talk to Adam every day, so he's one of my homies. But yeah, man, it's really great to have you on, talk about pDAI. I'll tell you, the past couple of weeks with how the Pulsechain and the HEX community and everything that's been going on with the markets going down and all the FUD, and then all of a sudden pDAI comes out of nowhere. What's your first initial thoughts about all that?
I'm trying to think when I first was made aware of it, but I want to say it was like a week and a half ago, maybe, when I learned that the price was moving. But I actually was told to buy a basket of forked coins early on from some guys, and it wasn't just like one guy. It was like different pockets of hexagons from way back pre-SAC days, that had just said like, hey, there may be something here. And I've said this before on stream, was like when Richard made the wrapped Bitcoin farm go live, it totally changed the landscape or the precedent for what this could mean of like what is value and where does value come from, and how do we create value in this ecosystem. And so with the pDAI thing happening, the information's hard to find on it, I guess. Like, yeah, there's like spaces, but in different streams, but nobody's really made a clear and concise like explanation for what is going on between all these different protocols and tokens. And so that's basically what I'd like to do tonight, is just kind of break it all down and see if we can come to some understanding of like what's actually going on. Because when you look at the charts, like there's some weird stuff going on. Like, for example, with like that USDC pDAI pair, like the PUSDC and the pDAI, that thing pegged. Basically, it tries to hold value of 1-to-1 ratio, and it did that sometime around August 11th. And so that to me is telling me that there's something going on under the hood.
Right. No, that's a phenomenal point. So how about we do this? I'll tell a story about what's going on, because most of the time when I've done a lot of talks with other live streamers, we did one with Rax Riches. I just went through the whole timeline, and then from that timeline, we can break it down and talk about it and get an awesome dialogue. And this will be great for anybody in your following. It'll be great for people in my following. But there's also a lot of questions that you can actually fill in, because believe it or not, you were in HEX before when it first started. Is that correct?
Yep. I made my first HEX stake on day one.
So you're original OG when this stuff first came out, and there's like a website and whatnot. Actually, before we get into the timeline, I just want to talk about that because I'll tie in later. But when you first got into HEX, what was that feeling when you first saw the website? Was it like mysterious? You had no idea what was going on?
100%. It was definitely like this. It was almost like stumbling upon like a treasure chest, but when you open the treasure chest, it either could have been like a hunk of coal inside, or it could have been like the path to riches. So that dream and that mystery and that wonder of, if this was going to work, of the first blockchain CD, was kind of what enticed people, in the narrative that Richard created of, is this token really capable of doing a 10,000x, right? Because he basically came out and said, this thing is going to make you rich. And so I think like a lot of that early on was very mysterious. And I think the website was really basic back then. Like literally it looked like a 10-year-old made it. in some of the early day speculation was, this would be a good way to get investor funds in, and the original goal was to save people from themselves and to stop, basically be the best scam out there, I guess, or at least make it look like it was a scam. And that original website, was very crude. And but still, even though we're just reading these little text bitmap or these little text files with like Richard's words on them, like, oh, this thing could do a 10,000x, and this volatility is what you need to sit through for mad gains, and all these different sayings that we're used to hearing. To me it was like worth taking a shot, because I was a BTC maxi and ETH maxi at the time. I came from the mining space, and so I even though I didn't fully comprehend or understand like the inner workings of the contract, I still put my few pennies that I did at the time in on the idea. And so I think like that draws a lot of parallels back to what we're seeing now today with this whole movement. I'd like to say my speculation later on and about who's behind it or who's not behind it, but right now is what it just is a very interesting time to be looking at this now. And there's a lot of parallels between the beginning of HEX and then what's going on here with pDAI.
Absolutely. And everyone viewing what Axe just said, keep that in the back of your mind, because we're going to tie it in towards the end of this. So let's just go through the story and the timeline of pDAI. I'm going to give you the Spark Notes version, and then there's things that we're going to have to kind of expand on. So to start off, what first happened with pDAI was back on May 11th, the contract was actually open in the MakerDAO contract, and someone went in and accessed it. And then on May 13th, Pulsechain went live. And essentially, the blockchain was out. Everybody was excited. They got their PRC20 token drops. Now, right at the same time, May 13th, when the blockchain was live, we had a whole ecosystem of tokens. And the main one was this token called aTropa. And what aTropa was doing was it was basically getting funds pumped into it from a mysterious privacy bridge run through Beatroot and another company called Blockbin. And basically what they were doing was adding liquidity to the token, pairing up with pDAI, sending it to a burn wallet address, and basically controlling the supply of pDAI. During that time, we had essentially that same wallet buy a bunch of Maker tokens up, change the MakerDAO contract so that the wrapped ETH can't be used as collateral. And also we found evidence of a payment from the same wallet straight to the MakerDAO development team to actually fix an inflation bug on MakerDAO. Now, also in that same process, through that vote, there was also another DAO governance vote where it actually transferred the DAO governance over to the Lido token. So now the Lido token is the governance token, and the wrapped staked ETH behind the Lido DAO is actually now going to be used as collateral to back the DAI token. And so that was just basically like one step into this murder mystery. Now, what happened with aTropa was we started to see more tokens come out and pair up against aTropa. We had something called the Down token. We had the TSFI token. We also had oh gosh, I don't know why I can't remember. There's one more that I can't remember. But essentially what was happening is these tokens were being paired up with aTropa as well, and they were removing it and adding it back to circulation. And so over time, what we're starting to see is essentially a lot of money coming off chain through a privacy bridge, pumping up the DAI token and slowly bringing up to peg. And during that process, we start to see the price of DAI go up and down, up and down, up and down, up and down. And slowly it's starting to test levels. Now, the question is, who is behind the DAI, the pegging of the DAI token? The first and number one answer is Richard Heart. Richard Heart wants to bring this. So theoretically, it would make sense for Richard Heart to have a stablecoin on the Pulsechain so that it's outside of USDC and USDT. In addition, we're seeing millions of dollars getting pumped through this bridge and being burnt just to stabilize the peg of DAI. And so now we're in this weird phase where there's a murder mystery. We're seeing like hints and bits and pieces. Nobody knows what's going on. And the number one question behind this whole murder mystery, why hasn't Richard said anything about this? So to kind of start off, based off of the stuff I just went over, what is your overall thoughts of the DAI token and this complex ecosystem?
Yeah, so are they burning? So because like aTropa can be minted, right, by the contract creator, and they're burning DAI, right? They're not burning aTropa.
So yes, they're burning the liquidity pair between aTropa and DAI.
Oh, they're burning the liquidity tokens.
Yes, and so
Okay.
who was the founder of the Maximus DAO? I forgot his name.
Dipcatcher. Yeah,
Dib,
he's been all over this. Yeah.
yeah. So Dibcatcher said that he found the code, and you're probably better at coding than I am, but apparently the code was unverified, and he said he got the aTropa coding, read through it, found this bug, and then posted the code up on Twitter. I'm not saying he's a liar, but I do have speculation whether or not he actually found the code or whatnot. But as of right now, it seems that the aTropa token does have can mint tokens from that contract code.
Mm-hmm. Yeah, I don't think it was like any nefarious thing with him. More than likely, because like from my understanding is he took embedded like encrypted code, so like and you had to reverse engineer it and then look at the bytecode data and then have it respit an output, and then he had to fill in the blanks here and there to kind of come up with a conclusion. So there's no like 100% on a lot of that stuff, but it's just his speculation on a lot of it. But yeah, that's all interesting to me, I guess. But how is it? So how is this pairing? How is it making sure that the forked USDC and the forked DAI are like trying to keep 1-to-1? Because that to me is interesting too. That it's doesn't only apply just to DAI, but that there's creating this virtual stability between two forked stablecoins right now. To me, that's the most interesting thing, because the DAI price can go up and down in value right now, the same way as like the Coast protocol can go up and down in value. But the fact that pDAI and PUSDC are like trying to peg 1-to-1, to me says that it's creating like this parity and on two assets that should be worth nothing theoretically. So I'm like trying to figure out why that's happening or how that's happening, and like that could be like the start of creating basically 2 or 3 stablecoins that act like a triangular shape that just creates this like stability pool. And so then, okay, there's that element that's confusing to me. But then also like with Lido, like what's the total Lido supply and who holds it? Because that would imply like why they would have given that the ability to be the token that was gonna back all this and give it value, right?
Yeah. So to highlight on some of the stuff that you were talking about. So for the last question you asked, so the Lido token's actually being owned by that aTropa wallet. And then to answer your question with USDC, USDT, and the DAO and the DAI pegging. So from my understanding, for USDC and DAI, they basically have a price where they follow each other. And if one has a price that goes up, you can actually go in and mint some of these tokens. This is what Dipcatcher did when you had that arbitrage opportunity. So the DAI token, the USDC token, and even some of the other stable coins, it's the same type of code, but on the Pulsechain. And since DAI is a little bit more complex than USDC and USDT, it's basically going to follow the price of DAI. That's part of the reason why they're coming up. Now, the question is, if they were to follow the price of DAI, will they have enough liquidity so that you can swap in and out of them? Because one thing I noticed is the price is going up, but the liquidity is kind of stagnant. So that's the other concern. But also another thing is we're starting to see these tokens get to parity. And some people believe that with the DAI parity, this could also mean that more other tokens could come to parity as well. And maybe this is something richardheart is involved in and whatnot. So your overall thoughts based on like looking at DAI, do you think richardheart might have his hand in this, or do you think this might be like an outside force or whatnot?
My instinct is telling me that it's not RH and that there's some other person who sees opportunity. And I don't know who it is. It could be the OGs of the maker contract. It could be some other smart crypto guy that's been in early and knew a lot of the code level stuff. You know, I give you an example. Like there's just so much money being made just by arbitrage bots right now on Pulsechain that because of the inefficiencies of PulseX. And it's like there's smart crypto people that are like code level that are just like coming in and they're just raking the people over the coals through like bots. And now like this would be another attempt to create value somewhere, and in the process someone gets like super rich. They're, by the way, this costed whoever did this early on, it's costed them a ton, right, to make all these changes to the maker contract, because they had to go and put that initial investment in to make that happen. So it's possible that, of course, it's possible that RH is involved in that. The fact that he said nothing about it and the timing of it, is Richard not talking about it because it's a threat? Is he not talking about it because he's involved, or is he not talking about it because of the SEC lawsuit? It could be any of those three factors. So him not talking about it to me doesn't mean that he's implicated at all. But I think it's an interesting theory for sure. And but let's look at how much has really been invested to make this a reality right now. I think just from that initial, I think I heard a number thrown around like $1 million just to get the thing bootstrapped, right?
Right, correct.
And then ever since then, there's just like the volumes on. Let's just look at pDAI and aTropa. Looks like it's about 33 million, and of course that's the market too doing that. So it's not like one guy put in 33 million of volume, right? Or to the upside, it was like up and down, and the market as a whole. But yeah, so like you're looking at like just on one of these liquidity pairs, like you're looking at like at least $10 million probably has been put in here from like a few select people potentially. So yeah, I mean it's definitely an expensive project, and if it works, it's going to be well worth the investment. And I'm not sure, dude. He could, the RH devs, because like look at, we don't know who's running, who's the admin team behind Pulsechain. I mean, we know about Bretep, or we know about like some of the devs publicly, but generally we don't know all of Richard's devs, who's involved, like what kind of expertise they have or what leverage or edge they would have to create something like this. And he could not even be involved. So he doesn't need to be involved for this to be a success, but it does definitely entice people to want to be involved more if they think he's involved.
Absolutely. No, that was a great point. But I want to talk a little bit more about the pDAI theory, and we'll revisit that question later. But here's one of the crazy parts that I've been researching. So when I first got onto this, I saw what was happening, and I was really diving into the research and seeing how pDAI was going up. Me and Adam, we love to get into PRC20 token copies, and when we heard about this massive like Twitter post from this guy named Hodlnomics and broke it down, and I dove into his research. I said, "Wow, there's something here," and that's when I started just getting into it. Now, here's something interesting about this whole theory that really blew my mind. There's a privacy bridge that was facilitating every single one of these transactions, and I'm going to present real quick and just show you what we're looking at. So I got a share screen right here.
Yeah, this is the part. This is another element to this whole thing that I was interested in learning more about. Now, these guys are active on Ethereum and other chains as well.
Yes, and they're actually on Base right now as well.
Okay.
So
they're definitely hungry, right? That tells me that they're active. They're hungry, right? So they're actively there's proof on chain that they're involved in Pulsechain, and there's proof on chain that they're involved in Base. So this is good, right? This is evidence that these guys are actively doing things on these new chains, and they're hungry. Okay, that's good.
Yeah, absolutely. And then I want to bring up one more tab, see if I have it here. I had to delete it. We're having issues in the beginning. This one really. All right, let's bring this up.
Yeah, Beetroot. I actually think this is a really sick platform myself.
Yeah, so I got a crazy connection I want to show you between Beetroot and Blockbin and all this. So basically, for guys you don't know, Beetroot, major privacy hub, they do the privacy bridge, and they're actually connected to Blockbin. Now, Blockbin is the main thing that is the bridge they created is going to be mainly transferring assets from Ethereum to Pulsechain. And what they're mainly looking at right now is creating something called a prepaid crypto card. You attach your wallet to a prepaid like debit card. You can go in and just do transactions across any store whatsoever and just buy whatever with your cryptocurrency. And they're all privacy transactions. And this is something Richard really talked about in the past. But what really caught my interest was when I came over here to Beetroot Privacy, I couldn't find anything about this company. I even looked them up in the Cayman Islands, but I found one thing. They have a partnership with something called Li-Fi right here. And if I come over here to Li-Fi cryptocurrency and I pop up the website, it talks about this connection between TradFi to DeFi. And one of their biggest partners is actually, come down here, Coinbase, Circle, and then Andre Kranji. I don't know if I said his name right, but he's the head guy of the Phantom Foundation. So what I'm confused about is if Richard Heart is a part of this entire scenario, he must have known about this privacy bridge before the Pulsechain was live. And also, he knew this was going to be a tool when this gets turned on. And so, is there a connection between Richard Heart and the pDAI pegging theory? And is there a connection between Richard Heart and Beetroot or any of this? Because that's the only way this would have been successful if he did not have that privacy bridge. You see what I'm saying?
Mostly on the basis that he's got tons of the DAI supply. Is that what it is, or like what was the base?
Yeah. So the main basis. Let me put this here. I know I'll just share your screen a second. Did you want to share your screen?
I was just gonna have the pDAI chart up while we're talking.
Okay, gotcha. So basically, he owns about 25% of the DAI supply.
Yep.
And it's kind of like, if you think about it, it's a little bit like leverage. So in order for, so during the sacrifice phase, a majority of the tokens sacrificed were DAI tokens straight to the sacrifice wallet and whatnot. And because he owns a majority of the DAI supply, it's actually much more beneficial for DAI to work with him, because if he sold it, it would crash the peg and whatnot. But I don't think he would do that. He's not that type of dude. And because he's such a big proponent of DAI, and there's multiple times when he sat there and he talked about how, hey, DAI could potentially have value on the Pulsechain. This was like somewhat of a hint of what was going on. So what's your overall thoughts on this?
Yeah, so like just pulling up here, the PulseX sacrifice on Ethereum has 7% of all the supply of DAI. So that's like $278 million of DAI. So yes, he does have a lot of leverage over them, and he could definitely be talking with them about doing something like this, of course. And it does benefit him if this all works out, for sure. It brings value to the chain that he created. So that all makes sense to me. I guess like so did you hear about, this is just some thoughts that I'm having. USDC, they're gonna launch on 6 new chains. Yeah. USDC, now you have evidence that Circle and USDC is working with, or is somewhat partnered in with Blockblend somehow, or through Beetroot, right? So there's some connection there. So a lot of these, it's probably like, if you think about it, the Solidity dev community is probably a pretty small, tight-knit group of people. The guys that even worked on Pulsechain were coming from originally from Ethereum. They were Ethereum devs originally, right? And so it would make sense that these guys talk, and if they're all seeing the potential in this chain, I just see how so many of these people could want a piece of the action, and like it's like way above and beyond what all the people that could be involved in this. So that to me is way more exciting than it just being like Richard and his 14 devs working on something, if that makes sense. But that he may have a hand in it though, right? So that's actually making me more bullish on the idea of the whole thing, because it's pulling in elements of DeFi that were seemingly unconnected before. So you got Beetroot, Blockblend, Lido, the Maker guys somehow are involved in this. Now you're drawing connections to Andre Cronje, who is like a fucking legend in the DeFi coding space. Circle is partnered in there. Coinbase, like there's a lot of you just threw in a lot of stuff, like different organizations and groups, and this may be a lot bigger than people really can even see yet, right? And man, that's exciting, and that's like who knows, like at this point, to me, like we can follow the on-chain data, the technicals, and just keep uncovering more and more pieces of the mystery as it goes along. And and then I guess pivoting here a little bit and just looking at the technical chart on pDAI here, like this is not a type of chart. Like at this point now that we're at, I'm looking at an 8-hour chart. These should break down, like just based on the structure. Like I've seen this before where it's like a blow off top, and then a retest of the breakout level, and then it comes up and creates this like triangle pattern, And then this is supposed to break down hard and come back and test like the mid range. But it's just done this before. Here, here, here. Like and now it's gonna, is it gonna, if it keeps doing this, and it's doing it as a function of everything we've already discussed. This candle here is like scary to me. That's like a really bullish candle with that wick. And this is happening while Pulsechain is like shit in the bed. Like Pulsechain just made, like, it broke this key support level today.
Right.
And so if like pDAI is going to continue to overperform in this environment, it's like probably going to be the, quote unquote safe haven in this market, which would give it even more potential to make new highs, right? Like I'm not even necessarily convinced or think it's necessary for pDAI to peg, just that it's creating value out of seemingly nowhere. I mean, it's obviously not nowhere because there is an investment and smart people behind this whole movement, but the peg thing is like the goal that's like 10 steps away, but just even the fact that it's creating value in here and it's like holding key levels over and over consistently is like kind of scary.
Well, yeah, no, I'm glad you brought up the chart and you broke that down. The interesting thing about this is, there's a Tropa and then there's down. And the one thing that we noticed about this other token called down, I don't know if you want to bring it up real quick. Yeah. But so when we start to see a massive sell pressure on the DAI token, we also see that same sell pressure on the down token, but we have like massive sell amounts, but the price of it just stays stable the entire time. And honestly, it's probably one of the most mind-baffling things. And I'm not smart enough to really break it down, but if you just take a look at it, it's basically been kind of holding that little sideways pattern going out. But right during when you saw those two big red candles, the sell pressure was astronomical comparison to the buy pressure. I would say that the buy pressure would encompass about 10% of what was being sold at that time. So I would expect it to absolutely just crash down. So the theory behind this is when we get a massive sell event on the DAI token.
Because this is, by the way, I'm looking at down aTropa pair. That is the correct pair, right? You wanted to look at? Okay.
Yes.
And so like we're only looking at less than 100 grand of sell pressure to make this candle and this candle. So that's really not a lot of USD value.
Right.
And then we also have to figure out, what made it break out here. So the date was August 15th at noon, breakout. Well, let's look at what happened on pDAI, August 15th at noon.
A little bit of breakout.
Let's see here. That's midnight. I'm going to have to zoom in a little bit to the hourly. Let's see. August 15th at noon, right here. Yeah, so this was what happened, was this action coming into this resistance level.
Mm-hmm.
And in terms of volume, $159,000 of sell volume, 89,000, 73,000, 186,000. I'm thinking it was this sell pressure here at resistance, which was, by the way, the breakout level. Maybe these other coins are trying to help manage these breakout levels and try to create support by shifting sell pressure through other liquidity pools, right? That's like the simplest explanation so far.
Yeah. Well, no, absolutely. You just nailed it on that. But basically, we're starting to see this down token stabilize, and what we're thinking is there's some sort of correlation with the sell pressure. That and the name is down, so that's basically the main thing. And then I guess aTropa and that liquidity pool is somehow used to mint DAI so that it can just add that token to circulation, is what I'm thinking. That's just my theory. I'm curious to see at that May 15th mark, do you have aTropa up as well?
Mm-hmm.
Could you just give us your overall thoughts of what was going on in May 15th when that happened?
Oh, there we go. So this was the peak right here, May 15th. Let's go to like a 1 hour. So this is aTropa versus DAI. I hope that's the right pair you're looking for. But yeah, so let's see, the 15th at noon. Somewhere in here, this big sell candle here was at 5 o'clock. So with our forensic analysis, this is at between noon and 5 here on aTropa. and then it continued. It actually went higher, and then this was 15th at noon. Here's 5 o'clock here, and then DAI 5 o'clock was this bottom. It was this bottom candle here.
Okay. Wow.
So we can kind of like figure out whatever magic was happening under the hood. It stopped DAI from falling here at the same time as down token had like a pullback and resumption at the same time that aTropa had a pullback and resumption off that level.
Wow.
And what does that mean? Well, let's look at what's happening. I'm just throwing this in here just to see if I can find anything else. But on like this is the USDC and so okay, so then this is USDC and pDAI. It broke peg, so this broke peg at that time, and USDC got up to like $1.10 relative to pDAI, and then it shot back into its range. It's just stuff that's been good. This is all stuff that's happening at the same time. We're trying to figure out what's going on.
Right. Interesting. So, looking at that chart, I did see that before with USDC and DAI, and it's basically it seems like they're being pegged together. Now, as for the price movement, right now it's trading sideways, and what we're predicting is it's going to go up to the next level, which is going to be a penny, to see if it can test that support. And the idea is there's something going on that's actually driving it up to move to that next level is what we're thinking. But as to what that thing is, we're still trying to investigate. And that's what's so mysterious about this, because it seems like there's trading bots coming in, buying and selling, buying and selling, buying and selling. And as it continues to flatline across, it's getting tested, and then it moves up to a next level, and then continues to the price continues to go sideways, going on to the future. So that's like the biggest mystery about what's driving it to move up to peg. And some people believe it has to do with the Lido DAO.
Yeah, I was
the
just about to
Rapsec
say,
Ether.
where's the value be coming from Lido, right? Because Lido's coming in and being collateralized to backstop the sell-off. So they're, I think, right, that if I'm thinking about that properly.
Right. Yeah. Yeah. So yeah. Go ahead. Sorry.
Yeah, I was just like, so whoever's in control of the Lido supply, they're basically adding more as collateral or they're just, we haven't even looked at like a Lido pair. Is that even involved, or is that just happening at the code level? Like in terms of like over collateral, because when you collateralize, you create more supply of DAI, right?
Mm-hmm.
Then you can use that DAI to thicken the pools. Then you can use that when you thicken the pools, you make it harder for the price to slip. And then when the market maker is ready to move the price higher, they would remove DAI from the pools potentially, and then move it up to make it move higher faster. It's like a 1-2 punch.
I see. So yeah, that would make sense. I haven't really looked at the pairs, because there's a guy named 9 Iron Capital that was doing research, and he was actually diving into that. That could very well be the big thing behind what moves it up to the next level. And there's been some speculation about, so if this were to come into parity with $1, what are some things that can make sure that it maintains parity? One of the things is possibly pairing up DAI and putting on PulseX, so that we have a extremely liquid supply on PulseX. Another one is we had the vaults from MakerDAO. There's actually a forwarding address straight to the Lido DAO, and the Lido DAO has the MakerDAO vaults that are being used to add collateral to the DAI token. That was also a big piece of information I forgot to mention. So in order for us to reach peg, there's things that need to happen, whether someone puts up a large sum of money so that it can back the DAI token in value, or we have something happen on PulseX, or something happen through the Lido DAO. In your opinion, what do you think DAI needs to do in order to hit peg?
So I've noticed that this amount of in the USD value of in these pools has come down a little bit. I think it was at $81,000 per side in this pair. This is DAI versus Pulse. I don't know if this is the main pair to watch, but this is just kind of what I've been going by. But so this was at like 2.1 billion maybe. Now it's down to like 1.9 billion. And then obviously Pulse is losing its value, so it's bringing down the total dollar value of here. So basically on the other side of the pair on the DAI side, again, if Lido is the thing that's backing the value through collateralization, then thus the creation of DAI, you could remove collateral to get rid of DAI supply, or you could add collateral to create more DAI supply. And then whether you'd want to create or remove supply would depend on the direction you want to move the chart at what time. So like, but then that when you do that creation or deletion of DAI supply, you're doing it, and then you have to apply it to the LP pools to make the effect, right? So like, if you put more DAI, so basically so what you'd look for is you'd look for them to create more DAI after the run up, and then they'd put it in the pools like here, or like whatever here, to try to create support. So you'd watch these values go up. And this is what's happening on just DAI and through Lido. But in terms of like, this is the part that's so complex, is like in terms of like what these other tokens are doing on their own, I can't even like wrap my mind around it fully yet. I just don't even have the right questions to ask to explain, why does aTropa just go sideways, or why does down token go sideways like this, or like why are these tracking 1-to-1 between USDC and pDAI? Like, this is the part there's definitely something going on there that I'm having trouble. This is where 9iron would probably come in and be like, oh, that's happening because this is happening, right?
Yeah.
But,
yeah, no, absolutely. So based on what you're seeing, have you done any, actually, no, let me back up. Have you done any work with any like bot trading or anything in the past before?
Very briefly back in like 2018. So nothing on, it was never something that was on chain. It was always like an exterior program off chain. So yeah, I'd never really used a bot on the blockchain before.
Okay. Well, so from your experience, what do you think's going on with the price? Do you think this is like a bot we've never seen before? Do you think this is a lot of some sort of external player? Like, what are your thoughts on how this price is being stabilized?
So like, just quickly off the cuff, like I can look at this and I can like single out this address. It's a whale address. And if you so like all these different things that you're seeing here, this is all activity from this one whale address. And you can see that like it buys, sells, buys, and then a little bit of sells, buys. So it's trying to keep the price stable. Whatever this address is doing, it's like it's probably harvesting or extracting liquidity on the highs, and then it's resupplanting it back in on the lows. And these aren't like huge buys or sells. They're just like, 400,000 pulse, 1.6 million pulse, like 20 or 33,000 pulse. But it's just the consecutive, like, I'm wondering if this isn't just countering any like market movements as people are coming in and going out. And it's just trying to like do the opposite to try to keep it more flat. I'm not sure. Yeah.
Yeah, well, so what's interesting is I always notice is we always have these huge run-up candles, and then we had a couple FUD events, and I'm not gonna get into it. I'm not into drama and stuff, and then it started going down and then started flatlining. So it seems like whatever's pushing this price up is not being pushed by the community. It's being pushed by this outside liquidity coming from the pools.
Mm-hmm. I agree.
Yeah, and the real question is, we have all this money coming in. Where's the money coming from? And, some people think it's from a sacrifice wallet. Some people think it's from someone else's personal funds. Where do you think this money's coming from?
Just looking back at the PulseX sacrifice on ETH anyway. Like, I guess we'd have to pull this up on the Pulsechain. This is something I haven't actually done yet before, but this used to be over 300 million, I think.
Oh, really? Oh, wow.
Don't quote me on it, but I thought it was like over 300 million of DAI. I could be wrong.
Okay.
Let me pull up the. Let's see what this address looks like on Pulsechain. So tokens. Yeah, there's not much on here, huh?
Yeah, no, that's the thing, because I'm not sure. I haven't really looked at the Sacrifice wallet at all, and but I don't think I don't think the funds are coming from there,
Nah.
and that's like the mysterious part of it, is because it's going through like Beetroot and this other block bin bridge, and just trying to figure out what's the motive behind bringing this thing to peg. So go
It
ahead.
could just be as simple as like cornering the supply. Cornering, okay, so if you think of this as like digital real estate, somebody wants to control DAI on Pulsechain. That's like that's the motive. The motive is like if you can create value there, and get the thing to peg, then yeah, you have all of the stable coins over there, and you if you had all the Lido, and that's what's backing it, and then you have a huge supply of Pulse or whatever else you want to collateralize it with, you could basically control the entire stablecoin market over there. Because I don't really think there's that much in terms of like. Here's a good question. You remember the total supply of pDAI?
No, I do not. I think, wasn't it 50 billion? I don't know. I need to look.
I'm trying to pull it up. Because like, and then just finding out like how centralized it is over here, that stuff's going to help us figure out who's in control.
Yeah.
And like if there's interactions with any of these pools or bridges or anything, that's going to help us try to like kind of like walk it back.
Okay. Actually, I think it was somewhere right around 23 billion, but some of it was actually
It
getting
says
removed.
21.7 billion DAI.
Okay.
And so like
Gotcha.
imagine you got it to peg, you'd have $21 billion of value. So, but it does, this is my point, is like it doesn't need to be that much. And that, by the way, like there's only like less than $90 million of value in stablecoins on Pulsechain. So the play might just be to thicken up the liquidity. Like this is, so between MEV bots and people and the valuations dropping, people are extracting all these wrapped, bridged in stablecoins from Pulsechain. It's almost like a ticking time bomb. Like at what point is there just nothing left? Because this is, I mean, this is now at $88 million dollars of value bridged in from Ethereum. But dude, this used to be like we've seen a total of like $640 million come into the bridge, and now over 400 million is left the bridge. And so this number continually declines. The play here is to create stable value on, if it is what we're thinking it is, then it's to create stable value on the chain, that someone is in full control of. That can't be like bridged off, right? That people are going to be forced to have to use at parity or at, even if it's at a penny. So like again, that was my point, was like 21 billion times 0.01 is $210 million, which would be 2/3 of the total stablecoin value on Pulsechain. So it doesn't need to hit $1. It's just the fact that it's creating stable value is enough. Like, and that's what people are missing, is that what it's doing is already the important piece. Like the peg is just like the narrative, but the reality is like even at a penny, you've created $210 million of stable value potentially. And then people are going to want a piece of that action. That's gonna deepen the liquidity pools. Where does this all stand on like PulseX, like on the pools? Like when you look at the let's see here, TVL. So this is the total TVL of V1. If you could do this move, theoretically, if this infographic is tracking the value of forked DAI, this should raise the TVL here, and especially if they start using that pDAI to back other things. That's the thing, is like they're gonna need, the people that want to control this thing, they're gonna need the market to buy it at a penny or whatever number, and then start using it to back the real token, or the real tokens like Pulsechain and PulseX and HEX and all these other major assets. But in doing so, then you suffer the same fate of this, which is a fiat extraction and de-dollarization. So it's those other protocols like aTropa that we need to really figure out the nuts and bolts of it to figure out, is it substantial or sturdy enough to actually use as a stable coin in that event? You know, are the good actors behind the pDAI price movement going to have enough of the supply and be able to use it to back like PLSX and that, and not get that value then siphoned back away, you know, the same way that this bridge is losing value every day.
Yeah, you know, some points I want to bring up about the bridge. Now, in my opinion, most of the hacks that I've ever seen happen at the bridge level. And so this is also a big part of why the pegging is such an important part, because Pulsechain does need its own stablecoin. Now, something I'm also seeing developing the space, layer zero. Layer zero is coming to the forefront after we saw what happened with multi-chain and a lot of other blockchains. And layer zero is actually partnering up with Circle, and they're actually talking about providing infrastructure for CBDCs. Now, the real question is, with multi-chain, all these protocols coming down, do you think Pulsechain will be brought into the layer zero network? And do you think maybe Circle might be behind the pDAI pegging?
Well, I think you kind of already drew like a common thread there before with your research, which was that, you know, Circle is tied to Coinbase. They're both associated with, I think it was Beetroot, right?
Yeah, Beetroot, yeah.
And then people are using the Beetroot bridge at the very least, you know. The Circle hasn't really announced where they're putting their USDC coins yet. They said 6 networks, but they haven't really singled out any which one. They haven't spoken publicly on it. So it's definitely within the realm of possibility. And they'd be smart to try to come capture value over here, especially when you look at like the amount of adoption that you're getting, just like the simple adoption metrics. Like, let's see here. I forget which page it was on. Maybe it's on the home page.
Mm-hmm.
Just transactions having create, like the transaction volume and active wallets, stuff like that. That's like that. The network effect is all that matters in crypto. They just need to like create the floor. And I've said this with all my HEX analysis over the years, is how easy it would be to pump the price and create a market, create value if you had, $200-300 million backing you. So it would make sense for them to come try to get a piece of the pie. And like the money in it for them is, as a stablecoin provider, is you can make 3 or 4% on $1 billion. That's substantial, right? That's really substantial. And so you're bringing value to the chain, and then you make your, 2, 3, 4% by lending your stablecoins to the network to for users to use, and then you make LP fees also along the way if you're providing as a market maker. So like there's plenty of opportunity for them to make money and bringing it that to the chain, of course. And whether or not that they're behind this whole pegging thing, it seems like, I guess, what would be the benefit for them to do this if there is added risk there and effort that was otherwise unneeded if they just created a USDC and threw it on Pulsechain? I guess that's my question back.
Yeah, well, that's a very good point. And in my opinion, how I see the Pulsechain being built out. So USDC is on every major blockchain except for the Pulsechain. And the synthetic copy that we get from the bridge isn't the same coding, from my understanding, of the USDC stablecoin from Ethereum. And so so the synthetic copy is a complete different type of software. And with stablecoins, one thing I learned from Rax Riches is there's keys to all the stablecoins, and people can access it, change it, and whatnot. So how I see it is, Richard created this synthetic stablecoin that pegs to the USDC Ethereum that can be used to transact and spend on Pulsechain. Now, in my opinion, I see USDC as the trap, as the main CBDC, because it can easily have an update to change the coding so that it can have a social credit score on it, carbon tracking limit, the whole caboodle. I won't go too much because I don't want YouTube to ban the stream. But how I see USDC coming into this play is maybe they're using this narrative to kind of come within the Pulsechain community and use it as a way to build from a community root so that it brings adoption on Pulsechain. But also on the flip side, I also see this being something Richard Hart, because what he's trying to do is create a native stablecoin to Pulsechain, and because technically it's not necessarily his software, he can basically not have to deal with issues with the SEC and the government. So for me, I'm on this 50-50.
Here's the thing is like when you bridge USD. So to me, base level, the USDC that's bridged in, is that, if that's what we're talking about, that bridged in USDC, that's still, obviously, you guys know, like that can be shut off at the other side. So when you bridge it back, you can't ever redeem it, and that's the scare. That's like the fear. So then the forked version, I think they would still have keys for that as well, because it's literally just a copy paste of Ethereum. So I'm pretty sure you can still transact freely with bridged in USDC while it's a wrapped, fake token on Ethereum, on Pulse. But the only you might lose value, like let's say like Pulsechain got blacklisted and Circle invalidated all coins, USDC coins that went into the Pulsechain bridge, let's just say. Then when you bridge that value back over, it doesn't even have any value because it's been blacklisted. You can't transfer it or anything. So then those coins actually get locked in the bridge, or like they become useless, unsendable, or blacklisted. And then I think they can do the same thing with the forked copy as well. So then, but there'd be no incentive to do that, I don't think. I think if anything, they're just going to recreate a new contract on Pulsechain and that's, I think, the route that they would take. But they could also just say, hey, we already got our forked version. We'll just bring in the same amount, or we'll just bring in new dollars to collateralize and back those ones. And now they're backed as well. So I don't know which route they're going to take. But so, in terms of like capital controls and like it being like the CBDC and all that, to me, that's just like a puff piece. Like, I think it's just a narrative that goes around. Like, not to say that, because look at, we already live in a world where there's capital controls, and like if you try to withdraw too much money from the bank in cash today, you're going to get asked a lot of questions. There's spending limits, and everything really is tracked. Yeah, it's illegal for like a 3-letter agency to go to your bank and say, hey, give me this guy's customer records. That's illegal, but they could still try to like go through the extra effort to try to get dirt on you if they needed. Now, if people are doing this and like tens of thousands or hundreds of thousands or millions of people are doing this, then that's just too much for them to handle, and it's overwhelming. So then they're going to want to find another layer to tax it. And I think that's more like the thing, is like they're going to try to use CBDCs, or like, let's say USDC, as a way to implement some automatic tax when you spend it, and try to create this like chain. Because we already have capital controls. The money's already digital. Like less than 3% of all money is paper anymore. So I think that's all just like kind of like smoke and mirrors to get people to miss the point on what's actually happening here, which is like real value is being created out of thin air by the people, for the people.
Right. No, I definitely agree with you on that. And the one thing I really want to ask you about is PRC20 token copies. Just switching the topic over a little bit. What are your thoughts on all PRC20 token copies, and do you think some of these tokens will reach parity at some point in this next bull market?
Yeah, dude, that's a really good question. So that's where I was going with BTC, wrapped BTC. And I thought that this was such a cool thing to see when the admins behind Pulsechain basically put this thing on the farms, and then we saw this massive run up on. It was like a 478% move in 2 days for wrapped BTC. Now, this coin in particular is important because it's got a very limited supply. I want to say there's only 134,000 of these things. And so just based on the tokenomics alone, supply and demand and controllability, like this one's more easily controlled. Does that make sense?
Yes.
And so this one can, just based on tokenomics, which by the way, that's all that fucking matters. The rest is just narrative. Like this is potentially one of the ones to watch in terms of like value creation. Now it doesn't, if parity is, I don't even know what parity was. Let me pull up the other one, BTC to BTC chart. But parity is like I want you guys to remember it like this. it's nice to think about, but it's not necessary. Because like, let's see where 1-to-1 is. Yeah, like 1-to-1 is like way out here.
Right.
You know, it's like on the way to 1-to-1, like way up here, like you're looking at 250,000% returns. And so like it more than thinking about things in terms of parity, just think about the opportunity cost of not having something that's very scarce and more can't be in like cap supply. So like think about it like this. There's less wrapped BTC than there is real BTC out
Yeah.
on the Bitcoin network. So that already is a cool like metric to track, right? Because like if you can, it's less scarce. So then theoretically, if demand is anything better, you know, like it doesn't have to be the demand that you're getting on Bitcoin to keep the price held up because of all the negative externalities of mining costs and all this other stuff pushing the price down and paper traded Bitcoin. There's no paper traded wrapped BTC, you know. So even on the way of if somebody accumulates these lows, you know, it doesn't even need to go to like 1% of a Bitcoin for you to realize a 600% return. And this is what I was saying earlier: is the debate. We're looking away from what's important, which is that there's value creation happening on the chain way before parity is ever even a topic of discussion. It's like the opportunity isn't in parity on all these things; it's in value creation on the way to the dream of parity.
Yeah, and just something to add there, I did see what you were seeing right here with the wrap Bitcoin pair, and I got so excited when I saw it on the PulseX farm. I was like, "Yes, this is what I'm talking about," because I had this vision in my head that PulseX would have like the most popular tokens. You pair it up with the bridged over ERC20 token copy, and then you have it paired up with wrap Pulse, and then there's a little bit of a backlash by the community, got taken off. In your opinion, based on all this stuff we're seeing with PRC20 token copies, which ones are you looking at right now?
So the like forked major, like basically the top, like Link, Aave, them, those kinds of ones.
Yeah.
Yeah. So like, I don't know if you guys saw, but like Link and Aave, I think we're pumping recently. Let me see if I can pull them up. What did I do with all those coins? I haven't looked at them in a couple days, but mostly I'm looking at these on my phone. Here we go, Aave. I think this pumped. I know Link. Yeah. So like the Aave one, it did 477% off the lows.
Yeah.
You know, and all you did technically was you just retested the wick lows 2 times, double bottom, higher low. The entry signal was the break of the trend line, the retest. So like right here was the entry point from a technical level, and then bam, you could have captured 228%. And, you know, and so like basically that this goes on forever, like, you know, range bound. You know, even if you go make new lows, even if this thing goes down forever, there's still opportunity, right, in the chart. But if Pulse does a 10x or 100x over the next 10 years, all these other forked coins can go up just on, even with no utility, right? So yeah, they're definitely keep an eye out on these things and look for technical breakouts and technical retests. You know, Link was another one that I think most recently had a move. You know, and whether or not these things get used like for their actual purpose or whether they just pump and dumps, like that's the question that no one can, no amount of technical analysis is going to answer that for us. Link did a 293%. But you take the technical trade here on this retest. So when this is why wicks are important. When that thing retested and then wicked back up, and then this candle pumped, like, dude, it would have been too late, right? You had to catch that. So it's a very small window of opportunity. But yeah, there you could have realized 155% more your pulse, right? Like a 2.5x. So yeah, just keep an eye on these things, right? Those are some of the ones. You know, the meme coins for a while we're doing it, but I think that's going to be that was like a good play earlier in the year. That might not be a good play the second half of the year, because like that's just been played out. Like with a lot of times with these coins, the narrative gets played out and people get tired and then they move on to the next narrative. So right now it might be because of pDAI's success, you know, forked copies. Yeah, definitely.
Yeah. Well, I feel like with 4 copies, if you look at the liquidity pool, most of them are paired up with Pulse, and then a few of them are paired up with PulseX. When we see Pulse rise, it's going to be like a tide for all ships. All of them rise up. And how I see this next bull market coming in is you're going to see a lot of these PRC20 token copies absolutely explode just based on the fact that the liquidity pool has so much Pulse in it.
Yep.
And yeah, so that's what I really love. And what's really interesting is there's actually some PRC20 tokens that are actually paired up with aTropa right now. There's Doge, Zen Classic. I can't remember. There's another one, but there's so many of these aTropa pairings, and what we're starting to see is an artificial pump of some of these PRC20 tokens that people are taking advantage of. And it's absolutely crazy to look at some of this stuff. But overall, one thing I want to ask you with your PRC20 token trading, do you mostly do day trading, or are you like a long-term hodler? Like, what's your strategy?
Yeah, I mean, it's all changes over time. I don't usually trade. I'm more of like a find the best deal and buy it and hold it. And I'm really a huge fan personally of like yield and compounding. So like I have not given up on Hex. Like I think that that thing can still do incredible things going forward, and it's on the it is a riskier play, right? At this point in the stage, because like people are thinking like, oh, could it crash to zero or like not recover, or could it only, like, let's say the combined price, could it only just barely hit the all-time high again? And I think a lot of people are looking at that, but that for me is like a for sure, almost like a for sure bet. So like the compounding and having those, like a hex staking ladder from years ago still active, like that's still one of my go-to plays. Like I still am interested in buying hex, like even still. And but in terms of like the more interesting things, I think, is what you're getting at is like, you know, I even took a trade on XRP and I actually put it on Twitter, you know, when that SEC resolution came through, because like that was like the easiest 240% move I've ever made. And it was just on the basis of, you know, the XRP guys, they waited fucking 4 years for some sort of movement on their token. And so I just did a 10x leverage long with a small amount of money. And that was like the most trading I've done in a while, right? Like this, it was during this breakout move. It's all documented. Guys in my group like saw it happen live. But yeah, this looks like a crazy candle on. It's 100% move. It looks like a crazy candle on the daily. But if you go into like a 1 minute chart, this is kind of the granularity of like if you are gonna go degen and trade and shit, you want to look at like 1 minute chart. Oh shit! I didn't pay enough. I didn't pay enough money for the fucking enough data.
I got you.
But the point here is that, like, if you break this down to a 1 minute, which I can only do 15 minutes here, there was plenty of time inside of here to catch this for 10x leverage. And then, you know, this was an easy, just like technically, like this was an easy sell point. So I just put a sell limit order in here at 89 cents. And like, it's like, well, why'd you pick 89 cents? Well, I picked 89 cents because that's where this has been resistance for years. Like going back over 2,000 days. Right. Find 89 cents right here. You know, so like look at that, just wicked right in there, and I just had the sell order in there. You know, taking that, and you get as a get in and get out, right? Because we're still in the trenches in the bear market. So, yeah, that was one of them. And that's like, you know, obviously it's off of RH and the Pulsechain and stuff, but dude, there's so many opportunities on Pulsechain. It seems like, you know, memes popping off every day. Freaking this Zen Classic, dude. If I can find that chart, the OG Zen chart. This is the ETH side.
Yeah. No, Zen Classic was crazy because I actually got into that at the bottom before it ran up, and I was just screwing around Twitter and I told everyone I was a Zen Classic commander, and the next thing you know, it starts going up, and I was like, what's going on right now? And it's because of that aTropa pairing. And
yes, isn't that interesting? So, another conspiracy theory: Jack Levin's involved with aTropa. No,
Jack Levin's a Chinese agent. So,
oh god,
dude,
Russian turned Chinese operative.
Dude, Rags is on that so hard. He like we were on a live stream with Adam on Vibra. He's like, dude, I bet you Jack Levin's in on this. I'm going to investigate this. And I was like, yeah, man, send me over the report. I'm curious. So
it's fun to speculate. But yeah, so in terms of like, because I have to be careful with what I say, because I do think your general pleb, which is probably not who's watching this, you guys have probably been around a little while, but they really need to just create a core group, like a core holdings, which is either some Bitcoin and ETH, or go real risky and get some HEX and Pulse, you know, and like have a staking ladder or something like that, just to get the ball rolling. So because I do have to speak to general audience as well as, you know, to the more advanced people who do like to trade and take risk. There's so much opportunity. So I guess I'll just leave it at that. Like, yeah, I do hold some of this as well, right? But it's not. I'm not necessarily trading this chart, but I got mints coming out. You know what I mean? So it's just, you know, you got to. Here's the fear, and this is kind of what happened with the Bank X thing and Godwill. It's like Godwill can't sell 800 million HEX, but he can sacrifice it for a project to get leverage in their token. And then if their token ever is successful, one, he can print the 800 million HEX back over 10 years. And two, if that other token's successful, he can steal value back out of that appreciating token and put it back into what he cares about most and reconsolidate the energy. But by only holding HEX and HEX stakes on its own, you could never pull back energy that's dissipating out of your ecosystem and bring it back around full circle without getting exposure to all these other things. And this is the important piece I think that people are missing, is like the dilution was almost forced upon us, because when Pulsechain got announced, then all of a sudden it's not just about HEX anymore, right? So then it forced people to have to look outside in the event that other tokens did do huge moves, and you had a way of capitalizing on those moves, right? And so I'm speaking abstractly and broadly about kind of the last couple of years and what people have had to do in this reshifting and redistribution and dilution of the portfolios, and the why it happened and the hows and like where it's going to go. So it's definitely good, like if you're active crypto like user, that you're paying attention to like all these different things. Now, if you got a full-time job and you don't have time for this shit, then you're probably better off just DCing in on the core assets.
Right. Yeah. No, phenomenal point. So picking up from what you're talking about when you're getting to the Pulsechain ecosystem, we're in a very fudded time, to say the least, but also mildly enjoyable because of the pegging. What do you think's going on with the Pulsechain right now, and what's your prediction for the end of this year for the entire ecosystem?
So I'm going to show you guys a chart, and it's going to probably scare most of you, but at least I'll be able to say that, you know, I told you so early. I hope I'm wrong. I really hope I'm wrong, actually, because it doesn't look pretty. Because it's not necessarily like how far down it could go, but it's more about how long it's going to take.
Right.
So I'm gonna post this chart. 1 second. All right. So this is like the whole Wall Street psychology cheat sheet thing. If you know, think about the guys that sacrificed 2 years ago, and they sacrificed like a 20-cent HEX or a 30-cent HEX to get into the pools. And then Pulsechain ran up, and then it peaked here. And this black line is Pulse. You can see it here. Mm-hmm. They were sitting on, theoretically, 20-cent HEX worth of value per unit sacked. And then it doubled. So now they were basically, just back in May, there was guys with Pulsechain sack bags. They were sitting on the value equivalent of 40-cent HEX. And so, like, because that's true, we may only just be in the middle of the downtrend. And this will be like a triple bear market for the Pulsechain ecosystem because of the fact that they basically missed the bear market. So now they're going to have to go through they're going to create this third leg of the bear market. And so like this would have us just somewhere in here now. Whereas like we still have like potentially a 60% move lower to go and like thousands of days potentially before this recovers. If it happens out in the same way. So this is basically predicting, and this is just super rough, but you know, 50 to 60% decrease in value, and anywhere from like, you know, 100 days of sideways up to like 1,000 days of sideways, depending on how bad the macro looks, you know. And we won't need to go into the macro talk tonight, maybe, but maybe another time we'll come on and we'll go over that. You know, because Kareem and I discussed that in depth last night for 2.5 hours, and my private sessions on my website at accessalive.com, and it was like an amazing stream. Like we talked about why this is all going on. We looked at like the dollar and gold and oil and the stock markets and the bond markets, most importantly, and housing and yields. And we tried to paint like a really clear picture of like where we're at on the macro and like why we're here and how long it's going to take and what signals do we need to see from other things outside of crypto to see the relief in crypto, right? And
Right.
and it's at a pivotal point right now where, like, just to briefly show you, like, because Pulsechain isn't going to do anything if Bitcoin and ETH are falling. Like, it's not able to stand on its own yet. Remember, it gets most of its value from this bridge, which is Ethereum value, right? So it's like we're totally relying on Ethereum for value right now, which is why this is so important. You know what's going on over here, if it does turn out to be true, or if Circle comes in and gives us some native stables, right?
Right.
But let's see, in terms of the dollar, like it's done something in the last 2 weeks that's not good for risk.
Right.
And Kareem says, like, think of it like a ratio. And what's happening is this was set up for a further leg down, and like this was a huge collapse of the dollar, and it should have futtered her out and then just kept going lower, but it didn't. And the reason it didn't is because bond yields have continued to increase, which makes the dollar increase. So basically people are, nations, big organizations, governments are basically jumping into bond yields as a form of repayment. So like on the 2-year note, it's near all-time highs. So you're getting paid more of these dollars than like historically than you have in tons of, like, let's look at the monthly. We'll zoom way out and see how long it's been since you got this kind of payout. So think of it in HEX terms, like you're getting paid all-time high APYs, like stuff we have, not all-time highs, but stuff we haven't seen since the 2008 crash, and now we're there. And on top of that, you guys, like when the world's getting paid all, like 20-year highs of yield, you want that coin, the dollar, to go up in value so that your yield is worth more relative to inflation, and you're not getting debased. And that's what's happening, is the dollar is going up because yields are going up. And so it's like starting to rear its ugly head, and it's putting pressure on risk. And that's why the stock market is starting to decline. It's had this bearish engulfing candle. Now, if this monthly candle closes red somewhere around here, you better hope that it recovers off that, by October or November. Otherwise, you're looking at like a complete breakdown back to at least these lows here on these stock markets, which that's important for crypto, because if the stock market's going down, like crypto goes down too. Like they go up and down together. They're pretty correlated, because they're both riskier than holding dollars and earning a consistent 5% yield with only a 2-year commitment and a 2-year bond, right? So if that's all making sense, the dollar's looking like it's going to break back up now. There's still time left until that all kind of proves itself to be true, but that's all putting pressure on Bitcoin, which is putting pressure on the whole crypto space.
Interesting. Well, yeah, I was trying to get into that stuff. You're obviously better than me at anything chart wise, but from my research, it looks like we're going to have some pretty harsh economic times coming into this next, well, not harsh, but things are going to be looking good since we're in an election cycle right now. So there's a good chance that, something might pop off, like a surprise next year or whatnot. And I do firmly believe that this could lead to some negative market trends going on to the future. What are your overall thoughts of what to expect on the economic conditions this upcoming year?
Well, if the dollar is going to go up throughout the next 6 months, then like your crypto portfolios and your stocks aren't going to look good. But this still has to clear a lot of levels. So that's not necessarily guaranteed either. What I'd like to see is kind of like ho-hum sideways boring action on this. and on crypto. So like, yeah, dollar comes up here and scares people, but then gets rejected. And then like at the same time, crypto crashes. So then at the same time, Bitcoin falls down to like 20K, and then comes back up and tests, and then they start to do a cross, something like this.
Right.
And same for the stock market. So like the stock market ends up making a higher low. There's a chart out there, like it's called Hope, and like it shows you like the, see if I can find it. It kind of shows you like the what happens in an economy as it responds to changes in the Fed rates. And so like first to slow is housing. So right now, like housing prices are at highs, and the guys that have those houses had really cheap interest rates, and they don't want to sell their house and have to get into another house that is going to have a higher interest rate. So they're basically stuck in a property that's super high in value where nobody can afford it and they're unwilling to sell it. And so the housing market's in gridlock right now across the country. And so that's the first thing that slows. And this is leading into this recessionary period. And then you start to see like new orders of, in industry and stuff start to slow down. And then thirdly, you see like profits start to slow. But this is not what's happening right now. The companies are posting like record high profits. So that's what's interesting. It's kind of a positive development. Like maybe we're not quite to the real recession. Like maybe we somehow create this soft landing, which is like one of the talking points that you'll hear on TV. And or maybe that this is just, we're still in phase one where the housing market's still slowing down. And then what you need to look for is for rates. Like, so the signal is on rates, right? If rates pause, that's usually a signal that they're going to decline. And when they decline is when you get the sell off on everything, and then a recover, and then that sets the precedent for lower rates, which like jumpstarts the economy, because then all these companies and other and buyers can like refinance at good rates down here somewhere, right? But
Gotcha.
we had like really low rates for so long that these guys aren't willing to sell their assets or their properties because it costs so much more to finance them. So the cost of money is keeping people like locked out of things and slowing the economy down. But usually what you see is like some sideways action on rates before a breakdown. But again, that's the thing to watch. We don't really know what's going to happen in that way, but we just said it's on a time frame. The Fed says they wanted to keep rates elevated up here for up to 2 years. Well, that would kind of line up with our 2025 bull market cycle, right? Because they've already been doing it for a year. One more year of this, kind of like keeping us elevated, and then boom, they break something in the economy, bring rates back down. Maybe not to zero, but just bring them down quite a bit, and then it's going to reignite all these markets. And the whole time, all these crypto assets and stocks and stuff, they just need to hold higher lows. That's all they need to do. Like other things that have happened in the past is just like huge capitulations. Like this was 2020 when rates dropped. Bitcoin just cranked down, and same with the stock market. They just like shit the bed, because imagine being to sell your whole Bitcoin stack at like 15 or 20 or I'm thinking too far ahead here. Let's say they sell their whole Bitcoin stack at like 10K. Where was this at? 10,700, and then Fed lowers rates, and they're like, oh, well, I could just borrow a bunch of money at no interest and then buy it all back down here at 5 and 6K. Like, wouldn't you do that? Wouldn't you do that? Especially if you're like a big, huge player in the space, So that's the play here, is that when rates are elevated, people get squeezed out. Cost of money is so expensive, they're unwilling to take on more debt at a higher rate to finance the fucking play. But the play is going to come after rates are lowered.
Gotcha. Okay. Awesome. Cool, man. Well, I got I'm going to do 2 last questions because we're coming up at about an hour and a half ish. Well, hour and 20 minutes. So
perfect.
So first question, for Pulsechain to be successful in this next bull market, what are things you're looking for within the blockchain, the ecosystem, the community?
I think one thing I want to see is Ethereum gas fees get out of control, and then Pulsechain is like really needed, like super needed. Another thing would be like if all these secret actors do make this DAI pegging thing work, it proves that there's a lot more interest, money, and eyes on the network that's just positioning right now. So that'd be another thing to look out for. This has been a huge development for us. So I think Pulsechain, in order to really succeed, needs to be adopted because of its necessity, not because people want mad gains, but more like because it just becomes unbearable to transact on Ethereum. And I think that's going to be a sweet time window there between when Pulsechain is needed and adoption booms, and when Ethereum does launch its gas fee reduction.
Awesome.
And they're estimating that like 8x reduction. So it's got to be timed, and it's got to be out of necessity.
Absolutely. Yeah, it's gonna be interesting to see how that all plays out. And then the last thing, will DAI hit peg, and who do you think created? Who do you think is behind this mysterious pDAI pegging? Hypothetically, Richard Hart, Jack Levin, or Circle? And it's hypothetical, so you don't take
think
it as a word.
I think if I'm just going to take a shot in the dark, of course I don't know. I don't even have a clue, but I think it's a dev that's created I think it's not necessarily Richard, but I think it's a dev that's behind maybe Maker or someone, one of the early ETH devs, somebody that's close to the source on a lot of this stuff. And then they just see huge, massive opportunity. It also could be OKX, or at least that OKX is funding the devs to pull this off, because OKX has a huge stake in Pulsechain. As a matter of fact, they were the ones that came in here and pumped in all of this volume on this recovery here. So,
Right, that makes sense.
I think it's being funded by people, and I think it's being pulled off by another group of people.
Okay, great theory. And lastly, will pDAI hit peg? It's a hard one. It's a hard one.
I don't think it will.
You don't think it will? Okay.
I don't think it will. I don't think pDAI will be worth $1, because I don't think it has to be to create value. But if I'm wrong, it still created value, so I can't be wrong.
That's good. Hey, that's a good response. Some people think it's gonna be a penny. I went on Twitter and said I think it should peg to $420.69 because I think it's a really great number. So
Let's
just
go.
my opinion.
Well,
Let's
how
go.
about this? How about this? What if it goes to a penny, and then it holds that level for an extended period of time, and then tons of the pDAI starts to get backed with PLS, and then but most of the supply is held by a few, and then PLS does a 10x. Well, then all of a sudden it's 10 cents. Then PLS does 100x. Now it's $1. I don't know. Just
That's a
some theory.
good point. That's a really good point. Maybe they're trying to really establish the foundation in the bear market, and then once you see Pulse explode, maybe that's what will bring it up. But regardless, that'll be something we'll just have to wait and see. That's the best part about this speculation. The hottest story right now on the Pulsechain is the pDAI pegging theory. So it's really cool.
Yeah, man. Thank you so much for having me on today. I'm glad that you were able to answer a lot of my questions, and we were able to kind of dig into the technicals and kind of get like a broad stroke approach to what we're seeing in the markets, man. It's been a lot of fun.
Yeah, man. And like I said, everyone on live stream, please go check out Access Alive. He has a YouTube channel. He has a Twitter. He also has a website at accessalive.com, gets into trading strategies, talks about a lot of the stuff we actually talk about on live stream, but in so much more detail. And don't forget to like and subscribe to my channel if you guys are into the stuff I'm talking about. And I'll see you guys in the next one. And also, Access, it's been awesome to have you on live stream, dude. Absolutely love this. It's pretty exciting because I've been following you for a year now, and hopefully we can do this again coming in the future, man. So
yeah, man, keep up the good work. We need good streamers out there. Appreciate all the hard work you're putting in. It's awesome, and it's appreciated.
Awesome. Cool. See you guys
later.